So, Riley, do you want to tell us what Jeff's going to talk about today? And then I'll give him a personal intro before he begins.
That sounds great. Well, our next speaker is Jeff Tompkins with Altos Trading, and he's going to share with us the Slingshot Setup. He's going to talk about market setups that occur with astounding predictability, volatility, expansion, contraction signals with big moves, and the clear-cut rules that he uses for identifying buy and sell zones in the market. So once again, I think that's pretty critical in today's conditions.
All right, Riley, I'll let you get Jeff up and going while I give him an introduction.
That
Jeff
sounds super.
Tompkins is with Altos Trading, and he's been trading stock options and futures for about 20 years. Over these years, Jeff has developed an arsenal of highly tested trading strategies, which have remained effective regardless of market conditions. So you're about to see why he's one of our most requested speakers. Do we have Jeff up and going yet, Riley?
There we go.
There we go. Jeff, thank you for coming on here today. I really appreciate it.
Oh, good morning. Thanks so much for having me, and thanks for the nice intro.
Mm-hmm.
All right. Well, I'll jump in since we're running a little bit behind today.
Take it away.
Anyway, pleasure to be here. We're going to be covering my Slingshot setup, which, as Raleigh and Pat mentioned, really couldn't be more relevant considering the volatility that we've been experiencing in the market. So it's my setup that I use to help me buy low and sell high on volatile markets. And it works in a lot of different market conditions, as we'll look at on some charts together today. But particularly in the market environment that we're in right now, it can really help you navigate these types of conditions. So before we jump in, I'll run over a quick disclaimer because we will be covering some different trading signals and examples. We don't guarantee anybody will mirror the results of anything that we share on our presentation. And of course, we all know that trading securities and options involves risk. And due to the time critical nature of trading, brokerage fees, etc., we don't guarantee that that our performance will be mirrored or that there won't be variances in performance among our subscribers. However, the performance numbers that we do cover on our sessions are based on actual trades that users could enter based on the signals. So I'm going to start out with actually one of my own quizzes, and full disclosure, there's not a prize for this one, unfortunately, but it's a little fun way to start out the session together today. So pull up your chat box and go ahead and type in the answer it'll be a multiple choice here, but type in what you think is the best answer for which human emotion is more harmful to traders and investors. So the options are A, fear of missing out, or FOMO, and B, fear of losing everything. So it's a simple multiple choice, just two options. But which do you guys think is the most harmful to us as traders and investors? Getting a lot of A's, a couple B's. FOMO. Probably more A's than B's. All right. I'm going to give you the answer. It was a trick question. So actually both are equally harmful. And I'll tell you why. So fear of missing out, or FOMO, can lead us to speculative decision making, right? So as an example, if we look at the cryptocurrency market, which has just been on fire for the past decade or so, but has also been extremely volatile, and we've seen it also crash a number of times. If we look at that as an example, many traders in the context of fear of missing out are likely driven to get into the crypto market, Bitcoin as an example, by fears that their friends and family would get rich quick without them, right? So none of us want to miss out on a hot opportunity. And a lot of people have chased cryptos with unproven business models and fear speculation. And as Hubert shared on his presentation a bit ago, he mentioned the example, if you'd put $100 into Bitcoin 10 years ago, it'd be worth 40 million. And I actually know a couple people that have done something similar to that, but it's a lottery ticket, right? And so it's almost impossible to accomplish. But people get into this because they have fear of missing out. But ultimately what happens is as traders begin to sort of regain some rational mentality and behavior, the market plummets, right? So people that may have done well from the beginning might take profits. They might be cashing out of their positions. Other people that got in too late may be taking big losses, right, as the cryptos crash. So basically, there were some lottery ticket winners, but more people than not lost money on that whole wave, right? And a lot of them were subject to some extreme losses. And unfortunately, I know a lot more people that lost a lot of money in the crypto market than people that made a lot of money. Now, the other one, fear of losing everything. This is a really powerful emotion because it arises, first of all, that, if we fear that we're going to lose most of or all of our investment, which we all have sort of that fear in the back of our mind, we know that we're going to have losing trades, losing investments, but when are they going to occur, and will I be able to control those losses? So we all fear losing everything. And unfortunately, again, a lot of people wipe out their trading accounts. They do lose everything. And typically this will happen when market volatility causes large swings in the markets, right? You can imagine if a market just steadily going straight up, it'd be pretty hard to lose money. So where most people lose money is when markets become volatile. And that's going to tie into something really important that we're going to look at here on our session. But basically, traders can become scared or fearful, right? Because once that enters our psyche, it causes us to make irrational decisions. And we typically will do that because of that fear of a big sell-off or a market crash. And a good example of this is back in 2008 during the housing crash, right? So the market lost more than half of its value. Investors pulled their money out of the market as a reaction to the market sell-off. People were taking losses, but unfortunately, it was only to subsequently miss out on recouping those losses in the dramatic recovery, because in the second half of 2008, the market recovered, and ultimately, of course, since then, in the past 10 years, has continued to hit new all-time highs over and over again, right? So you can kind of see where these two major psychological and emotional components of trading and investing can really make a dramatic difference in your results. And in fact, it's really the reason that, if you boil it all down, and of course, there are many variables and reasons that can lead to failure in trading and investing. If you boil it down, psychology is probably one of the largest, most significant determinants of our success in the market. And this is a really good demonstration of why that is. This is a chart that shows sort of that roller coaster of emotions that we go through as we enter a trade. And that typically will start with optimism, enthusiasm, exuberance. Of course, anytime we get into a trade or even a longer term investment, we're doing so with some degree of optimism, right? We wouldn't get into it if we didn't think it was going to work out. But there's always bumps in the road, right? We hit hurdles that we need to overcome. And for most people, that ends up leading to anxiety, denial, fear, despair. And this is where, we can panic and have that fear of losing everything. So, the FOMO part is in the beginning. We don't want to miss out. So we're enthusiastic and exuberant, and that can transition into that fear of losing everything very quickly. And often we get into these types of trades when there's a high level of financial risk in the market. And then as markets become more volatile or crash, or there's a sell-off or a correction, we then become fearful, right? But oftentimes that's the best time to invest. And that cycle repeats itself over and over again. And this is really where we can boil it down to why most traders and investors fail. This is one of the major reasons for failure among traders and investors. And we're gonna address this today and solve this problem for you on our session. And in order to do that, we need to understand the psychology of failure. So what are the key components that lead to failure in the markets as it relates to psychology? Because we're all humans, right? And even if we're using a very mechanical, rule-based system or strategy, we're ultimately the ones that are basically, taking that system or that strategy and applying it to the market. And so there's always the chance for human intervention, right? And because of those two major psychological components, fear of missing out and fear of losing everything, those can get in the way very, very easily. So anytime we enter a directional trade, of course, our goal is to buy low and sell high. But as I mentioned and showed you in the psychology curve, that goes against our human instinct. So instead, and tell me if this sounds familiar to any of you guys out there, and I'll be the first to raise my hand here, when a security is going down, we are more prone to sell it. And when it's already gone up, we're prone to buying it, right? Because we're just simply reacting to what we're seeing in the market based on our emotion. And here's a little kind of like food for thought. You know, when you think of a system or a strategy, again, even if it's very mechanical and rule-based, who designed that system or strategy and created those rules? Well, humans did, right? So it still comes into play, and there's still that vulnerability. And then when price falls, you know, regardless of what asset class you're trading or what time frame you trade in, it's really irrelevant. We can panic because, again, we're afraid of losing money. Nobody wants to lose money, but we have to accept that as a reality. So where the psychology comes in is how do we control these emotions and allow us to stay in the markets to be successful. And then, of course, when assets are rising, we tend to buy them because we're afraid of missing out. Again, think back to the crypto craze where, you know, the thing's just going up and up. It's parabolic, it's skyrocketing. You know, nobody wants to miss out on that. But try not to think that way, right? And you'll see here, if you can take a contrarian approach and not think that way, it's going to be a breath of fresh air for you. You'll see how much of a difference it can make. And then, of course, to compound these problems, we're wired to repeatedly make these same mistakes over and over again. We buy high and sell low because that's what our emotions tell us to do. And again, without a solid trading plan, we're really vulnerable to our emotions. And even with a solid trading plan, our emotions can interfere. So if you're lacking a strategy that can identify momentum shifts, and I'm guessing you guys are on here today and donating your valuable time to learn tips, tricks, and techniques that can improve your trading and investing. And I promise you're gonna accomplish that today on our session. But you're here for a reason. You probably have some sort of a system or strategy you're currently using, but maybe it's not telling you exactly when to get in and buy low or get out and sell high with the degree of accuracy that you're looking for. And that can pose a major problem for really any trader or investor, regardless of experience level, but certainly people that are struggling in the markets, and these have been difficult market conditions to navigate, that can become even more pronounced. So what we're going to do in our session today is we're going to turn the tables. Instead of being greedy when there's a high level of financial risk, we're going to be fearful when there's a high level of financial risk, as we should be, right? It seems intuitive, but again, most people don't think this way. And we're going to be greedy when it's really the best time for investing. It's that old Warren Buffett adage, be fearful when others are greedy, right? So, and we're going to be fearful when others are greedy, and then we're going to be greedy when others are fearful, conversely. So we're going to flip this whole curve on its head. And here's what I'm going to give you guys on our session today to make it easier. You'll discover my slingshot trade that has worked 100% of the time on the major indices. So you can go back all the way to the dawn of the stock market and apply this strategy and this system and setup that I'm going to teach you. And you'll see that when you apply it to the major indices, it's played out 100% of the time, even in all of the recent market crashes, as we'll look at here shortly. I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. And we don't play the game of picking bottoms and tops. We're not trying to catch a falling knife or, wait for something to peak at a perfect apex and then get out and see the market crash and laugh all the way to the bank, right? It just doesn't work that way. But you'll be astounded at how close we can get to bottoms and tops with the slingshot setup. And I'll show you how to apply it to any market in any time frame. So I always like to teach things that can be applied to any style of trading, because I realize that, and certainly we have now somewhere in the neighborhood of 50,000 members, that of course, every single one of them has a different strategy, a different mindset, a different abilities, different experience levels, certainly different life circumstances. Some people like to be at their computer all day and day trade. Others want to be out doing other things. So what I'm going to teach you can be applied really to any asset class, any time frame, etc. I'm also going to show you a little trick on how to eliminate a lot of your losing trades, regardless of what system or strategy you currently use. If you're trading directionally, this will really help you out. We're going to go over some trade examples together, and then stick with me to the end of the session today, and I'll show you guys how you can copy my success and get my trade signals I use to make a living in the markets. So let's start out by imagining if we could buy low and sell high without any guesswork, right? That's every trader and investor's dream, right? Who would not want to be able to do that? Because unfortunately, all too many of us use way too much guesswork in our trading. And this is, again, where emotions can come into play and have a negative impact on our results. So we are going to be looking at one volatility study on our session that will help us overcome this. And it's actually made it possible to buy low and sell high since the dawn of the markets with very little to no guesswork. And it's a unique setup I call the Slingshot. And again, if you apply it to the major indices, you'll see that, and I challenge anyone on the session to go back and run this exercise themselves. Go back to the worst market conditions you can possibly remember, and you'll see how this plays out. And it's really incredible. And not only can it help us buy low and sell high, it can also warn us of potential market sell-offs. And it does it with volatility bands. And once these bands of the market can't be stretched any further, they have to bounce back. It's an inevitability for there to be trends and momentum in the markets, right? So I always teach our members that if you're going to consider a strategy or a system or an approach to the markets, look for some sort of an inevitability, something that must occur for that system to work. Because if there isn't an inevitable component to the strategy, in other words, if there isn't something there that has to occur in order for it to achieve a result that you're looking for, then it's going to fail at some point. So even if it works, for a while, maybe it works even for a couple years, at some point down the road, it's going to stop working. So that's really an important component of the system. And the Slingshot, as you'll see here in a second, accomplishes that. And this rubber band effect that we're going to discuss actually makes it possible to accurately identify tops and bottoms in the markets. And it can give us some advanced warning, which is really nice. So let's look at an example of that on a daily chart of the S&P 500 index, the SPX. And we're going to look at something that's it's probably painful for a lot of people to look at or remember if you were trading last year during the Corona crash, right? So back in February of last year, we know that the market was hitting new all-time highs in mid to late February. All right. And so this is where that fear of missing out component comes into play, right? And again, it doesn't matter what system or strategy you're using. If it gives you a signal here to go long the market, you're probably going to take it, right? Because we're hitting new all-time highs. You don't want to miss out on any future up move in the market, right? But this is where there's a high level of financial risk. All right. And this is where we actually want to look at selling when most other traders are buying. And think about this. Most traders and investors lose money over the long term. So wouldn't it be smart to do the opposite, right? Why not? Why would you follow the crowd and do what everybody else is doing? Because they're the ones that are panicking as the market sells off and they're taking losses. But if we take a contrarian approach, we can actually use this Slingshot to identify when the market's likely to sell off, where it's likely to bottom. So this is where we want to actually look at buying when most other traders are selling. And then we want to look at getting out as the market rebounds, right? Now, most people that were in the markets last year were astounded that the market, first of all, tanked so quickly and then reversed. And in a matter of a few months was all the way back up to where the sell-off ensued. Well, I'm not surprised at all. And I'll explain why this happened in a second. But this is the Slingshot setup. And I'll show you basically the internal workings of it, the key components of where to identify these buy and sell points. So before I do that, I'll give you a little quick background on myself. If you haven't attended any of my previous presentations, I have 20 years of experience trading the stock options and futures markets. I do trade for a living, and I did receive professional training at Morgan Stanley. I'm the founder and chief investment strategist of Altos Trading. We actually currently have a little over 50,000 members in over 100 countries across the globe. So we're a global company. We have a lot of really great loyal members that use the strategies that I'm teaching on our session today. I'm also a hedge fund manager at Altos Capital. So I do manage money for my clients. And what I'll be teaching you on the session today and a lot of the the indicators and tips and tricks that I use, you'll discover for yourself that I also use in my hedge fund. So I'll share those with you. I don't hold anything back. I'm also the founder and the creator of the Trade Trend Signal software, which I'll be talking to you guys a little bit about today as well. So by the end of our session, you're going to discover one trade setup that's produced massive returns going back to the beginning of the stock market. And as I mentioned, it's so reliable. It's actually worked 100% of the time on the major indices. It hasn't failed even once, including in the recent Corona crash, right? And that was one of the worst market sell-offs we've seen in the history of the market. And there really couldn't be better proof that it can work even in those very extreme, dire circumstances. And it happens over and over again with quite astounding predictability if you know how to identify it. So whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So let's talk about the Slingshot setup. You're going to discover why volatility is one of the only leading indicators of market direction. If you guys are familiar with the VIX, the CBOE volatility index, or if you're familiar with implied volatility, it's in the name, right? It's a forward-looking indicator that is implying future volatility. Now, we all know most indicators are lagging, right? They're giving us data based on past price action. So wouldn't it make sense to use something that is actually forward-looking and is giving us information of what's likely to occur in the future rather than using something that's already occurred in the past? And volatility can help us do that. So I'm going to show you how to identify when markets may be vulnerable to a sell-off. And this will completely turn your trading around because it eliminates a lot of that fear of losing everything. How to identify when the market is likely to go up. How to determine exactly how far the market is likely to go up. This is one of my favorite parts of the Slingshot because it solves what I call the trader's dilemma. We get into a trade, it starts making money. When do you get out? Again, what's coming into play here? Fear of missing out, fear of losing everything. Even if you have a profitable trade, you don't want to cut it out too early. You don't want to exit it too soon and miss out on future profits. But you also don't want it to turn around on you, to reverse on you and see those profits evaporate and even turn into a loss. How many people have had that happen, right? I certainly have. And again, fear of missing out, fear of losing everything. How to get your hands on a tool that will change your trading forever. I'm going to give you guys access to a tool in our session today that I am confident will make a huge difference in your trading, could change your trading forever. And I say that because it has for me and it has for my clients and my hedge fund. All right, so let's start it by imagining a slingshot. We're getting into the fun stuff now. So as we pull the slingshot back, the muscle energy in our arms is transferred to elastic energy in the bands of the slingshot. And after we release the slingshot and we propel the stone forward, the elastic energy is transferred to that stone as energy of motion. It's kinetic energy, right? We can all imagine how this works. This is, a very high level physics 101 sort of overview, but kinetic energy is an important concept because we can apply it to the markets in the form of supply and demand. Basically, kinetic energy in the markets is buying and selling pressure, right? And it's what creates trends and momentum in the markets. So that's why I call it the slingshot, because the same principles apply in terms of bands being stretched. And just like a slingshot, we can only pull that back so far before it has to be released. Right? That's the key. And once those bands become overstretched, it's going to give us a buy signal and we can enter the market with high confidence that prices will go up to the initial resting point of the band, just like a slingshot, right? It behaves almost identically. Now, here's how we're going to apply the slingshot effect to the markets. We're going to use a volatility study that is forward-looking when you use it correctly. It can actually give us predictive future outlook of trend or momentum shifts. So we're going to use the Bollinger Bands to do this. And these bands are going to tell us when prices move too far from the mean and is likely to reverse direction. And the beauty is you guys can access this study, the Bollinger Band study, on really any charting or broker platform out there. It's available for free. And just like any other indicator, there's a lot of different ways to use it. There's a lot of wrong ways to use it. There's a lot of ways you can use it to lose money. For full disclosure there, but there are ways that when used correctly, it can be incredibly powerful. And it can help you pinpoint turning points in a security with astounding accuracy. I'm going to show you how to do that. But you'll notice in the chart on the middle of your screen here, we've got the Bollinger Bands plotted. And I'm going to explain kind of how these work and how we're going to apply these bands to the Slingshot setup. But you'll notice here that on this particular sort of generic chart that I just pulled, we've got a volatility expansion. So notice here that price is following the lower band, okay? And I'll explain the significance of this. And then after the sell-off ensues, we have a reversal. And what happens? Price goes back up, right? So again, think back to that Corona crash chart we looked at a minute ago. See how similar that is? So I'm going to show you how to identify these entry and exit points. I want to give you a little bit of sort of high-level overview background on the Bollinger Bands, if you're not familiar with them, because you'll want to have some basic understanding of what they are and why this works. But basically, it consists of 3 bands. So we take a simple moving average of the securities price. That's that middle band on the chart there. And then we take the standard deviation of the securities price. And that's simply a mathematical measurement of average variance. And it tells us how spread out numbers are from an average value. And you can calculate that by taking the square root of the variance, which is the average of the square difference of the mean. And then we multiply that by 2 and add and subtract it from that middle band. Now, that sounds a little bit complicated. You don't have to calculate that on your own. I just want to kind of explain why these appear the way they do. And because standard deviations of measure volatility, when the market becomes more volatile, the bands widen. And this is really the key bullet on this slide. This is what you want to understand. So when the market's more volatile, the bands widen. When it's less volatile, the bands contract. Okay, that's important. Now, I'm going to give you my settings that I use for this study. And these are typically the default settings on most platforms, so most likely you won't have to change these. But I use a 20-period SMA, so that's the middle band, and then a 2 standard deviation move from the mean. So those are the 2 outer bands. That simple. All right. Now, we're going to look at using the Bollinger Bands, which were developed by John Bollinger I think back in the 70s. They've been around for 50 plus years. They're widely used by money managers, institutions, hedge funds, etc., to identify volatility in the market. He originally developed them to help identify when an asset's oversold or overbought. I don't like to use them for this purpose in particular because, as we all know, any asset can remain oversold or overbought for extended periods of time. So we don't necessarily want to try to, play that game where we're going to guess whether something's too oversold or too overbought. But I'll show you how we can kind of tweak that using the Slingshot and buy low and sell high without really much guesswork involved. So basically what we want to look for with the Slingshot is we want to wait for price to exceed or hug a band for prolonged periods during a strong trend. And I'll show you how to identify this. It's really quite easy to see on a chart. And then we wait for that lower band to break and wait for a buy signal. And by the way, everything I'm showing you here can be reversed and applied to a short setup. But we're going to focus on just this, and for the purposes of the Slingshot, on just a long setup for today. So then we wait for the buy signal, and then we exit when price returns to the breaking point. And this has, as I mentioned, really worked out very nicely on every market sell-off, market crash in the history of the market. In fact, the major market indices have returned to the initial volatility breakout with 100% accuracy. So even if we look at, every presidential election sell-off that we've seen in presidential election cycles, all 4 major corrections back in 2018 that we saw. In fact, we're going to look at this in a minute, but the recent tech sell-off and correction we just had last month, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis, going back over 20 years ago, the 2000 dot-com bubble, every market crash, black swan event, bear market, you name it, this is played out as I'm going to show you now. All right, so let's go back to the S&P 500 chart. This is the daily chart of the SPX. Corona crash, so it's the same chart we just looked at, but now we've got the Bollinger Bands plotted. Now here's what I want you guys to notice. So on the left side of the chart, see how the bands are horizontal and relatively close together. So that's a volatility contraction. We're in low volatility conditions. This is where you actually want to be fearful, right? So most people, as we're hitting new all-time highs in the market, as we were during that period, are having that fear of missing out and want to get in on the uptrend. But look what happens here. We get a bit of a retracement. Now, I'm not going to get into all the, pandemic stuff and government shutdowns and all of those things that were impacting the economy. You know, the stock market's not the economy by any means, but it often can behave in a way that reflects what's going on in the economy. And certainly we were in a very uncertain time here. But that really is not something we need to concern ourselves with. All we need to do is look for the volatility expansion. So see how price starts to hug the lower band? Now, there's two things I want you to notice here. Price is hugging the lower band. And one other really important thing, we're getting a volatility expansion. See how the outer bands, the upper and lower band, are starting to diverge and move away from each other. That's your warning sign. So imagine if you knew that, if you knew how to spot that back at the end of February, you would have set yourself up to either protect any profits you had in open positions or even position yourself for a market sell-off if you wanted to short the market. This is the start of the slingshot. This is where the bands are getting pulled back. Over the next few weeks, the market tanks. It loses over 30% of its value in just a few weeks. If you were a buy and hold investor or you were long the market because you had a fear of missing out, you would have gotten killed here, right? Now, this was easy to spot. These are not difficult to spot. You just want to wait for that volatility expansion and price to move along the lower band. And then as everybody else is panicking and losing money, we want to look for an opportunity to come in and buy at a lower price as the market rebounds. Now, why did the market go back up over the next few months after we just lost 32% of the value in the entire market? Billions and billions of dollars lost here that were ultimately recouped as the price returned right back up to the initial volatility breakout. So this is where we want to look at exiting. So remember, when other people are starting to realize, oh, the market's going back up, I don't want to miss out on anything here, I'm going to jump back in. Well, we want to look at exiting on the right circle there as price reaches the initial volatility breakout. So it's kind of like an upside down triangle. Pretty cool, right? Let's look at another example. So this doesn't just work for market indices. It works for individual stocks. It works for futures. It works for Forex. Why? Because these are all driven by humans, right? All these markets are traded by humans. And even with algorithmic trading that's become more popular, all the algorithms were developed by humans. And most of them were developed with the benefit of hindsight and human emotion, right? So that's something important to consider. Now, let's look at Apple. What's happening here? The stock's in a strong uptrend. Probably have a lot of people moving into the stock, driving the price up. Then what happens? See how we have a volatility expansion? See the outer bands are starting to point away from each other. That's our warning sign. And interestingly, a lot of people will come in and buy off the lower band because it's a 2 standard deviation move away from the mean. Now, what did I tell you? Prices or an asset class can become overbought or oversold for extended periods of time. So if you had traded this bounce, and it did look like a bounce, that we had 2 bullish reversal candles right off the lower band, anyone that traded those would have gotten killed because the price moved right along the lower band and the stock sold off. Okay, so again, taking a contrarian approach, we want to look at coming in and buying on a sell-off. What happened shortly after? Price went right back up to the initial volatility breakout. In fact, as is often the case, price exceeded the volatility breakout, and that happens a lot as well. But this is where we would at least want to start to look at scaling out of a position or taking profits. Let's look at another example, QQQ. Volatility contraction. Notice on the left part of the chart, bands are horizontal and close together. Then what happens? Price hits the lower band and starts to trail it. This is the start of the slingshot. The bands are getting pulled back. The moving or the standard deviation bands are diverging. They're pointing away from each other. This is our warning sign. And then what happens? The market tanks. We want to look at coming in and buying as price goes right back up to the initial volatility breakout. I often get asked, does this work on an intraday chart? Absolutely. So this is a 5-minute chart of advanced micro devices, AMD. Same thing. A lot of people buy at the lower band and sell at the top band. That would have worked very nicely. And that can work nicely in ranging markets. But it ultimately fails as the slingshot setup starts to take place. The bands start to diverge. Price starts to trail the lower band. Price sells off. This is where we would take a contrarian approach, do the opposite of what other people are doing, panicking and being fearful, and look for an opportunity to buy at a lower price as the stock ultimately rebounds right back up to the initial volatility breakout. Now, the key is, so if you look at the left circle, it's pretty easy to spot the start of the slingshot, right? The key is, where do we get in on the buy, on the buy signal, right? So that's really the trick, is to identify when the bands are overextended and ready to snap back. And there are a lot of ways to do this. And we do teach this on our live sessions, which I'll give you guys the opportunity to join on our session. The key is to identify the buy zone, and we don't have enough time in our session today to get into all the nuances, but I'll give you kind of a few tricks. You know, you can look for bullish reversal candles after a sell-off. You can wait for price to trade back into the bands a certain degree. You can do, one thing that I do is use money management sort of tricks to scale into positions. So I may wait for like a 5% sell-off and scale in with a third of my position, wait for a 10% scale in on the second third, and anything beyond that scale on the final third. And that way you're sort of dollar cost averaging in, because it's difficult to identify the exact bottom. But what we do know is if we're scaling in and getting in at a lower price, we have a very high degree of success as price returns right back up to the initial volatility breakout. But I've actually made this a lot easier for you guys, and spent over a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting, and when this slingshot setup is likely to exhaust itself and the bands are released to drive price back up. And once I got this formula dialed in, I then had to configure it to work on all time frames and duplicate the success across all markets in an adaptable algorithmic formula that can reliably predict market trends. And the result from all this work is a tool that I currently use myself and in my hedge fund to identify accurate, high probability buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of the move. So in other words, we're going to get a signal up to 3 candles in advance of the move. What does that mean? That means if you're trading off a daily chart, you know up to 3 days in advance the likely direction of the market and the exact entry price before it actually takes place. And when you formulate the right combination of momentum indicators and combine them with volatility studies and price action setups, you can actually identify buy and sell signals at the outer bands with a high degree of accuracy. And this is what we've programmed into an algorithm called Trade Trend that gives us accurate buy signals at the bottom of the slingshot using a proprietary blend of momentum indicators that can not only warn us of market sell-offs, but also predict rebounds both short-term and long-term with really astounding accuracy. And we've designed it to work on any asset class, whether you trade stocks, ETFs, futures, Forex, and you can use it to screen for opportunities in any time frame. You can also use it to backtest. This indicator does not repaint. So once you get a confirmed signal, it's always on the chart, and you can go and backtest any previous signal. You can also use it to supercharge your option strategies. We have a lot of members who use the buy and sell signals to more accurately identify and time entries for a variety of option strategies. And we teach those as well in our live trade sessions. But ultimately, we've designed this to help you guys trade without any guesswork and give you everything you need to identify buy and sell entry spots. So I mentioned on the beginning of the session, I was going to give you a little trick to help eliminate a lot of your losing trades, which as traders and investors is really our biggest overhead. You know, now with trading costs being very minimal and most brokers being commission free, really our biggest overhead as traders and investors are our losing trades. And those are inevitable. But if we can reduce that as much as possible, right, you can imagine how that could affect your bottom line. So the way that we do that, and we've actually programmed this into the trade trend algorithm, is to use a buy stop and a sell stop order to confirm the momentum direction. So rather than enter a trade or even a long-term investment with a market or a limit order, as probably somewhere in the neighborhood of 70 to 80% of people do, perhaps even more, we are going to use a buy stop order to enter a long trade to confirm the direction. So a buy stop is simply placing a market order above the current mark price of the security and only getting in if the price trades up to that price. And then conversely, if we're shorting the market, we would use a sell stop below the low of the sell signal to enter short trades. And it can eliminate a lot of the false signals and whipsaws that we experience as traders and improve the consistency and profitability of the system. Because if there's no follow through, as you'll see as we look at the trade trend algorithm, because again, we program this into it, then we simply don't get into the trade, and it right there off the bat eliminated a bad trade. We didn't even get into it, right? So nice little trick. So let's go over to a chart real quick, and I'm going to show you what the trade trend indicator looks like and how you can interpret the signals. And I'll throw the Bollinger Bands on here in a second so we can visualize the slingshot, because this is a really nice example of it. But this is the QQQ, the NASDAQ 100 ETF. I'm just looking at a daily chart on TradingView here, and I've got the trade trend indicator plotted. So I mentioned that trade trend gives you up to 3 candles of advance warning before the move occurs. So that's the triangle that you see. So a green triangle would be a buy signal, a red triangle would be a sell signal, but that's not where we get into the market. In fact, let me show you exactly what the algorithm will tell us. So I'm going to put the labels on here. It actually tells us on that signal candle where to put, what type of order to use and where to enter the order. So on this buy signal, for instance, it tells us to use a buy stop limit order at 330.80. And that's going to be just above the high of this candle. All right. And you'll notice that on the next candle, the next day, we didn't reach that entry price. But on day 2, we traded up and did hit the entry price. And that was a really nice long trade. Okay. And then on this particular signal, this was a sell signal. See how it says sell stop limit order? That might be a little small for you guys to see, but it says sell stop limit at 329.68. So we place our sell stop just below the low of the signal candle, but we don't get into the market yet. We're waiting for follow through. That's why we use a sell stop order below the low of the signal candle. So we knew up to 1 day in advance where we would enter. And sure enough, the next trading day, we hit the suggested entry price. What happens? The QQQ tanks. So this was the correction that we saw. The signal came in on February 17th, last month. It triggered on February 18th, and the NASDAQ experienced a correction. It lost a little over 10% of its value in a couple of weeks. Look at this nice trade. Now, I'm going to get rid of the labels there, the entry prices, just so it's a little cleaner for you guys to see. But you'll notice that on this sell signal that we got on February 17th, triggered on the 18th, then we start to get these horizontal lines. So what are these? These are the trailing stops. So the algorithm is identifying and reading the market volatility and momentum in real time and printing a trailing stop for us to help us lock in profits on the trade until eventually price reverses and hits the trailing stop. All right, this was a really nice trade. So this was a short signal in around 329 and out down around 310. Pretty awesome. And then we also got a buy here. Actually, let me throw the Bollinger Bands on here real quick so we can see the slingshot as well. Because this was also a slingshot setup. All right, and the cool thing about the trade trend algorithm is it usually gives us some nice advanced warning before the slingshot. So we actually got the sell signal way above the volatility expansion in the slingshot, because this is where if you were purely using the slingshot itself, it would have told us to be fearful here and cautious and prep for a sell-off. But we actually got the sell-off way up here, which is nice. Doesn't do that every time. Sometimes it does give us a sell at the bottom of the slingshot. But this was a nice advanced warning. Now, see how the price trails the lower band? And then we get a buy signal, right? This is a warning. This isn't telling us go long yet. This is just simply telling us enter your buy stop above the high of the candle. And if the slingshot is ready to release, then we want to get out on the reversal, or sorry, get into the market on the reversal. Now look what happened. Where did price go back up to? And it actually exceeded it a bit, right back up to this volatility expansion. See that? And we had a nice trade trend trade there. All right, let me, I'm gonna wanna look at one other chart because this is a fun one that people ask about. Let me get the Bollinger Bands off. So you guys remember the GameStop madness that occurred back in February? You know, we had all this Reddit madness. People were conspiring against all the short sellers and creating this big short squeeze on GameStop, and took the price from 20 bucks to 300, over 300 bucks, you know, in just a matter of a week or two. Pretty crazy. The stock was just really in a somewhat of a slight downtrend, relatively flat, hovering around just above 20, between 20 and 30 back on February 22nd. Check this out. Buy warning from Trade Trend. Now, of course, Trade Trend didn't know that people were in the Reddit chat room about to drive the price up. But what it did identify is the early buying behavior as a result of that short squeeze that was taking place. So here's the buy signal February 22nd. Now we don't jump into the market yet. We simply place our buy stop limit. And again, if I put my, oops, sorry about that. If I put my labels on there, it's going to tell us the exact entry price. It tells us put a buy stop limit order at 5103. All right, so I'm just going to put that in and wait. Well, it doesn't trigger on day one. Day two, boom, big volatility expansion, big move up in the stock, went up 103.94% on February 24th. So you would have doubled your money there on the first day of the signal, but Trade Trend kept us in the market for longer. See the trailing stops here? So it's reading the volatility and price action. Okay, and you'll notice as it picks up, it widens the stop a little. It wants to give room for the volatility. There's our trailing stop. Okay, so on March 12th, we would have had our trailing stop right around $227 a share. The next day, or the next trading day, it was Monday the 15th, GameStop starts to reverse on us, takes us out. See this sell warning signal up there? The algorithm almost picked the top of this move up in GameStop. So it picked up roughly a $200 move in this stock with 2 days of advance warning, a sell signal, and there's actually an open short trade right now. So it gave us a sell signal. See, sell stop limit order at 257.14. So if you'd shorted the stock on the sell signal, you could have put your sell stop at 257 roughly right here. It also caught the move back to the other side. And now the stock's at 184.80. And see, our trailing stop is still up here. We could certainly tighten that up by now, but the algorithm is identifying a strong momentum shift to the downside, and it's letting us stay in that as long as it's in play. As it starts to weaken and reverse, it'll tighten that up for us automatically. Pretty cool, right? So that was a fun one to look at. I didn't trade any of these, full disclosure. I did not get involved in GameStop during these moves and didn't take these signals, but certainly wish I had spotted this one back on February 22nd. That was a nice one. All right. Yeah, Anton, it does work in real time. Yep. So the algorithm actually reads the market in real time. And I'm going to give you guys some proof of that. So I always believe in backing anything I teach up with real money proof. I never use hypothetical real money result or hypothetical money results. I use real money results. So I think that's important if you're considering a system or a strategy that you're going to follow of somebody else's, that they've used it themselves to make real money in the market. Because if they can't, then why would you want to use it yourself, right? And not only that, make sure that they're not showing you something that was during an easy period of the market. It's kind of like, you know, hey, I'm going to share my my buy and hold strategy that I started 10 years ago when the bull market started, and I'll show you how much money I made over the last 10 years just buying and holding, right? Well, that'd be easy. So I'm gonna show you one of the worst case scenarios. This is again going back to the Corona crash last year, end of February. Now I was looking for that slingshot, so I saw it starting to set up, and I started to become cautious. Right, I was being fearful when other people were being greedy. So I was mostly in cash. I got out a lot of my positions and stayed in just a few, and started to look to short some of the market indices. So at the end of February of last year, just being very cautious, trading 1, 2, 3, 4 lot positions, came out with over a $13,000 profit using the Slingshot and the Trade Trend algorithm. Then in March, the Slingshot really started to accelerate, right? So I saw the bands expanding. I saw the price starting to follow the lower band. This is where I became more aggressive. And by the end of the month, again, only trading 1, 2, 3 lot positions, as you can see there, was able to profit over $27,000. So between February and March, during one of the worst market crashes we've ever seen, using Trade Trend and the Slingshot, I made over $40,000 in real money, not hypothetical. This is using the tools that I've showed you on the session today. So guys, we've designed this strategy, the Slingshot, and our Trade Trend algorithm to work in any market, any time frame, with any size account. And what gives this an edge, and will give you an edge, is that you get the buy and sell signals before the move occurs, up to 3 candles in advance. That's key. And again, think back to the psychology curve that we started out looking at on our session today. What gets in the way of most people's success? What are the 2 key causes of failure? And how do we overcome those? Right? So we need to know with some high degree of accuracy, up to with some advanced warning, where we're going to get into the market and what direction the market is likely to go. And most indicators and studies out there don't tell us that. They tell us to get into the market right when there's a high level of financial risk, or they tell us to get out when it's really the best time to be trading. And that's what we've designed Trade Trend to do. So virtually every system will produce winning trades, right? But the problem is they don't keep you out of the market when conditions are not favorable, and you end up giving back your profits on the losing trades. Sound familiar? I know that I've done that myself. It's a major frustration with trading. And until you can develop a system, a strategy that's consistent and that can accurately identify momentum shifts and trends in the market, it's almost impossible to overcome that, right? And so we've changed that with the Trade Trend algorithm by giving you signals that provide forward-looking information and are not lagging, right? So we're, as I showed you on those charts of GameStop and the QQQ during the recent tech sell-off, we were able to get advanced warning of the sell-off and the rebound. I mean, how powerful is that? And here's more real money proof. So these are screenshots from my my TOS account using Trade Trend. So this was in the futures markets. Every single one of these trades was a 1-lot trade. So you don't need to trade big to be successful. You don't need to have a giant account. When you can catch these trends early and ride them, it makes a big difference. And not every trade's going to be a winner. You can see I have some losers in here, but Trade Trend helps us keep losses contained and helps our profitable trades run. And you can see what I was able to do using Trade Trend in the futures market, just trading 1-lot positions. So guys, here's my promise to you. As we wrap up today, I want to help you have days just like these, and I'm going to give you access to a tool that lets you copy my trades. And this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day and week after week. And I'm going to reveal every one of my special techniques and indicators that make profits like this possible, and I don't hold anything back. So you're going to get 12 months of Trade Trend for stocks, futures, and Forex that comes with exact entry and exit signals, as I just showed you, live interactive trade sessions. So we don't just give you the tool and say good luck. We give it to you, and we also help you use it and show you how we're using it. If you're not able to attend our live sessions, we do record all of those and post them in our members area. You can watch them at any time. You can also go back and watch all of our past ones. I host those sessions myself with my partner, Richard, and you guys get full support and personal coaching from us. You get trade adjustments to fix losing trades and a list of my most profitable tickers to trade that we cover on our live trade sessions. But ultimately, we're here to help you guys cut the learning curve and trade like a pro starting as early tomorrow. And trading does have one of the steepest learning curves in really of all professions. I mean, it really does. I mean, for me, it took me well over a decade to become consistent and successful. We don't want it to take that long for you guys. So ask yourself, if you were able to trade the sorry, that's a typo. This is from the last slide. But if you're able to trade the market volatility that we're currently in, ask how much that would be worth to you. Or if you're able to buy low and sell high and even beat the pros, how much would that be worth to you? And finally, if you had an experienced coach guide you down the path to success, how much would that be worth to you? Well, if you bought our package retail on our website, 12 months of Trade Trend retails for $14.99. Our live trade sessions retail for $5.50. Our personal coaching retails for $19.97. our Facebook group access, which we're all going to also going to throw in. We have over 800 members in our Facebook group, retails for $199, and our trade adjustments to fix losing trades, retails for $900. We're going to throw in a couple bonuses. I'm also going to give you guys my top 2 trade trend picks every Monday. So I'm going to email those right to your inbox. So it will help you get up and running quickly without having to select everything on your own off the bat. That will help cut your learning curve and see how I'm identifying opportunities using trade trend, as well as bonus number 2, how to create risk-free trades, which is an ebook that I've created to help you guys mitigate and even oftentimes eliminate risk in a lot of your trades, valued at $97. So the total retail value on our package is over $5,000. For the Market Madness Summit, we are taking 80% off. Guys, this is only $2.73 a day. We bill it annually at $9.97, less than a cup of coffee, actually less probably than a round trip options trade. So imagine what you're paying to your broker to enter and exit an options trade, right? This is probably less than you're paying for that, quite a bit less. So we've made it very affordable. We are going to limit it to 20 seats. So we provide white glove setup, full personal support. We can only handle so many members and provide good customer service at one time. So we do limit it for that reason. These are going to go fast. So I would urge you to take advantage and not miss out on one of the 20 spots. westmarktrading.com/Tompkins. And I believe that Raleigh will be, and the team will be putting that in the chat box for you.
Absolutely.
I know that I ran just a few minutes over here. I do want to take questions if any came through. Real quick, I'm going to go over one of the probably most common questions to kind of get that out of the way. The available platforms. So we have Trade Trend available on a number of platforms, including online charting platforms. These are like browser-based platforms, Wealth Charts, TradingView, and we also have it on Metastock, which is a downloadable charting platform, as well as broker platforms like NinjaTrader, Thinkorswim, and TradeStation. So we have it available for a lot of really great award-winning platforms. If you trade with a different broker, not an issue. This is actually one of the really valuable benefits of Trade Trend, because remember, it gives you up to 3 candles of advance warning. So you get your signal and you can easily, and you have plenty of time to do it, is go over to your broker and enter the order with your broker. In fact, I use the TradingView charting quite often, as well as Wealth Charts and some of the other charting-based platforms, because I really like their mobile charting. And I just get the signal off of there and put it in with TD Ameritrade. So, all right, really appreciate being here. Thanks everybody for joining. I hope you guys got a lot out of the session today. Again, westmarktrading.com/Tompkins. I'll see if we have any time for questions. If not, you guys can always email us at support@altostrading.com, and we're happy to answer any questions for you there.
That sounds great. Hey, Jeff, there were several questions that came in, but for time reasons, let me just try to condense it a little bit for you. So questions came in, and I think you addressed these. It works in any market. Doesn't matter. Stocks, futures, Forex, etc. Is there any limitation as far as time frame? Will it work on tick charts?
Yes.
5-minute
no
charts?
limitation. Yeah, no limitation on time frame or chart type. So you can use it on tick charts all the way up to monthly charts. You can use it on Renko charts, Heikin-Ashi charts, standard candles charts. There's no restrictions to where you can apply the signals. In fact, we have a lot of members who use it on tick charts or Renko charts, and it works really nicely, as well as across any asset class.
Sure. So, so the takeaway here, folks, is that if you take a look at the platforms that are available, and he's mentioned them all right here, if you're using those and you've got your current setups, etc., you should be able to go ahead and install Trade Trend right onto those packages and get the benefit, if you will, of the signals and the indicators and all the education that goes with that without interfering what you've already got. Correct, Jeff?
Exactly right. Yep. And guys, when you join today, you will get, it'll prompt you to select your platform of choice. So you'll get to select which charting platform you want the signals on. And then, as Raleigh mentioned, you'll get all of our live trade sessions and everything else that comes in the package, valued at over $5,000. So
well, that's terrific. Well, Jeff, thank you so much for your time today. Do appreciate your effort and all the work that you have put in to creating this very, very special system that you have. Folks, that's Jeff Tompkins with Altos Trading. And once again, his special offer is for the Trade Trend Signal Package, which includes the buy and sell signals up to 3 candlesticks in advance, the exact trailing stops, so that you can lock in maximum profits, and the fact that you can trade in any market and on any time frame. Go to westmarktrading.com/Tompkins to take advantage of that offer. And I think Jeff said he has 20 seats that are available. That's because of the one-on-one focus that he gives his the folks that subscribe to his services, and we really do appreciate that. So, guys, once again, we've had a couple of great presenters, and we're just getting started. We're